Welcome to our channel SNK and Company. Let us begin with this week ended February 22nd, 2026 updates on income tax, GST law, and other corporate laws. We start with the Income Tax Act. The Delhi Tribunal in the case of McKinsey Global Capabilities and Services, Private Limited versus Commissioner of Income Tax, Appeals, held that where the assessee had claimed deduction under Section 80G in respect of certain expenditure incurred on CSR activities, and the revenue had not disputed fulfillment of other statutory conditions of Section 80G, the deduction could not be denied. The tribunal observed that in the absence of any specific violation pointed out by the department, the claim of the assessee was required to be allowed in accordance with law. In an important judgment, the Calcutta High Court in the case of Principal Commissioner of Income Tax versus Express Trade Link, Private Limited, reiterated the settled legal position regarding Section 68. The court held that where the assessee furnishes documentary evidence establishing identity of shareholders, their creditworthiness, and the banking trail of transactions, the initial statutory onus stands discharged. In such circumstances, the burden shifts to the revenue to bring contrary material on record. The court further clarified that the assessing officer cannot brush aside audited financial statements, PAN details, and banking records as mere paper compliance without undertaking proper investigation. It was also held that non-appearance of directors of subscriber companies cannot by itself justify addition under Section 68, particularly when the assessing officer fails to exercise powers under Section 131 or seek verification from jurisdictional assessing officers of the investors. Accordingly, the deletion of addition by the tribunal was upheld. The Mumbai Tribunal in the case of Kishore Anand Shetty versus ACIT held that exemption under Section 54F could not be denied merely because the agreement for purchase of a new residential flat was entered earlier, where the assessee had invested sale proceeds from an industrial property into an under-construction flat and obtained possession within the prescribed period of 2 years. The tribunal also noted that the assessee owned only one other residential house apart from the new asset and therefore satisfied the statutory conditions. In another Mumbai tribunal ruling in the case of Akshay Deepak Talam versus ITO, the tribunal dealt with reassessment limitation in the case of an NRI purchaser of property. It was held that where the assessee had largely financed the property purchase through a documented housing loan and the remaining alleged unexplained investment, after considering such loan, was below the monetary threshold of 50 lakh rupees, the assessing officer's failure to apply mind to the available material vitiated the reopening. Consequently, issuance of notice under Section 148 beyond 3 years was held to be barred by limitation under Section 149, 1b. The Bangalore Tribunal in the case of Palapeti Vilapan Shakthidaran versus Commissioner of Income Tax, Appeals, examined eligibility of presumptive taxation under Section 44 ADA. It held that where the assessee declared commission income under Section 44 ADA but failed to demonstrate that he was carrying on any of the specified professions listed under Section 44 AA, 1, the benefit of Section 44 ADA was not available. The income was therefore assessable under Section 56. However, the tribunal clarified that only net income after allowing admissible expenditure could be taxed and accordingly remanded the matter for recomputation. We now move to important updates under GST laws. The GST Appellate Tribunal, New Delhi, in a significant anti-profiteering matter held that where GST rate on admission tickets was reduced from 18% to 12%, but the theater owner increased the base ticket price instead of passing on the benefit, the conduct amounted to profiteering. The tribunal directed that the profiteered amount be deposited into the Consumer Welfare Fund along with applicable interest. The Karnataka High Court held that where adjudication is required to be made year-wise, issuance of a single show cause notice covering multiple financial years is defective in law. The court observed that such omnibus notices violate proper adjudication framework and are liable to be set aside. The Allahabad High Court delivered an important ruling concerning proceedings against deceased persons. It held that where show cause notice and demand under Section 73 were issued against a deceased sole proprietor after cancellation of registration, without initiating proceedings against the legal representative as mandated under Section 93, the entire proceedings were void ab initio, and the resulting orders were unsustainable in law. We now discuss key developments under other corporate and allied laws. The Delhi High Court, in the case of Arun Suri v. Directorate of Enforcement, upheld the provisional attachment of residential property under the Prevention of Money Laundering Act. The court held that where proceeds of crime are not traceable, the authorities are empowered to attach property equivalent in value. It was further clarified that the mere fact that the property is ancestral or inherited does not grant immunity from attachment, as the statute does not carve out any such exception. Finding no illegality in the orders of the adjudicating authority and appellate tribunal, the court dismissed the appeal. In another important ruling, SFMA, New Delhi, in the case of Dove Marine Exports Private Limited versus Special Director, Directorate of Enforcement, held that officers of the Enforcement Directorate are competent to investigate and adjudicate contraventions under FEMA. The authority rejected the contention that only customs authorities were empowered in such matters. It was observed that notification dated September 27, 2018 does not impose any bar on adjudicating authorities under Section 13 Read with Section 16 of FEMA. On merits, contraventions relating to failure to obtain prior RBI approval for foreign borrowing arrangements and improper set-off of export receivables were held to be established. However, considering the facts, the penalties were reduced to 12 lakh rupees for the company and 50,000 rupees for the individual appellant. These were the key judicial and regulatory updates for the week ended February 22, 2026. Stay connected with SNK and Company for more professional updates on tax and corporate laws.